Felony is an offense.
See my angkong here now.
Dong 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 chang. Dong 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 chang.
That's not how it goes.
Let's complete by before 5 p.m.
Yeah, of course.
Let's complete by 4 o'clock. Let's go. Hey, bro, can see my footwear?
Zoom into his footwear.
Right.
Hey!
恭喜发财
Happy New Year to everyone!
新年快乐！
万事如意，红包拿来。
蛇年行大运，快高长大。
Happy New Year! Happy New Year!
Yes, welcome to another episode of NOTG.
Yeah.
I'm not too sure how many episodes would this be for the new year 2025, but okay, it's like Chinese New Year from the day that we are recording.
Yes. I think we've got some interesting questions here that's been asked by our audiences here as well. So I know Jesley can share some of the questions as well.
Yeah, today we have so many questions. We selected 3 questions.
Three questions.
There's 3 questions.
The producer selected 3
The
questions.
producer selected 3 questions.
Daniel.
Okay, so this is the first question. Is it really 2 weeks ago? From Kimi8145. Right, so she's asking on the BTO, with the new Prime Plus standard scheme, what is the best route for new young couples and when is the best time to sell?
Ooh.
So if you haven't already followed up with the news, nowadays the BTO don't MOP just 5 years.
Yeah.
Yeah, they have like segmented into what I like to call like Singapore Airline like that. You got economy class, you got a business class, and you got a first class. So I guess it's a Singapore thing. That's why like, you know, BTO also got these 3 different routes that or options that you can choose from. Maybe we touch on a little bit on like what are the BTOs available for couples to choose nowadays.
Yeah, sure. So I think just to like recap in terms of like the 3 different kinds, there's of course like standard, plus, and prime housing. So for the standard sites, it's kind of like what we all have been experiencing in the past, where we have kind of 5 years MOP period. But of course, these locations for some of these like standard housing models, they might not be someone that's located in like prime locations or nearby to MRT stations. Then after that, we have the plus models, which are slightly a bit more like premium kind of like HDB flats. So those kinds will have a 10-year MOP periods. And for lastly, the prime housing models, they also have a 10-year MOP period sites. But those kinds will be having more subsidies. But of course, do take note of their 10-year MP with according to the plus and the prime housing models here as well. So that's just a quick like summary in terms of the different segmentations for the HDB models as of now. Yeah.
So for the standard ones that MOP after 5 years, I'm guessing they are all in the OCR region for sure.
Yep.
Right, like Punggol, Sengkang, Tampines, Pasir Ris, Rong. But between plus and prime, they are both 10 years. Then,
Yes.
So what is the special thing or like what makes it really prime? Is it just the location or like is it like not near MRT? Is it near MRT? Because both are 10 years.
Yeah. So I think some of the like the prime housing models, those are like probably like I think we've known like Boon King, those kinds like are prime housing. Those are located in like close like CCR regions where a lot of like young people, they aspire to stay in this kind of location. So those kind of like more considered like prime housing models. So for the plus housing models, those are considered like what HDB has recommended, which is like slightly less prime. So those maybe are located slightly towards like the outskirts of like the CCR regions, that kind.
Nice.
Those-
RCR region.
RCR region, that kind. So those are considered like the plus kind of models. So that's how they segmentize it.
So basically, prime HDB flats are what we are used to in the central location. These are your $1 million flats in the resale market. So this will definitely be prime when it comes out in the BTO.
Sure.
If it's the plus ones, they are usually still in good locations. Definitely they are near MRT and town centers with amenities. All right. And of course, your standard ones are most of the thing that is spread across, just like I mentioned, outside central region, which is the western, northern, northeast, or eastern regions. So I think in short is why did the government did this standard plus and prime is to make sure to remove the lottery effect from like the BTO portion, so that people don't go and rush to want to just go and opt for the central region location, so that they can profit 2.5 times from their purchase pricing by increasing the MOP period so that now if it's 10 years NOP, usually these kind of houses will take 4 years to build because it is higher stories, right? So it means that effectively your opportunity cost about 14 years. So it allows for people who truly want to stay there for the long term, which is the intent for having like a BTO first. So they want to take out the profiteering from like the BTO system. So I think this is pretty fair.
It's just a rumor. I mean, I have clients that stay Dawson. Last time we don't have this kind of 5 or 10 years. It's just a 5 MOP. I heard that the construction time was 8 years.
Yes.
It was 8 years. So imagine, I mean, I don't know why is it 8 years. Maybe because it's like 40-story high. It really takes a while for the Lego to be stacked all the way up.
Last time the piling, the foundation work.
Not as easy to do. So imagine like you deal another construction time that is 8 years, then plus this prime that is 10 years. That's 18 years later before you sold. So that particular client, right, very funny. She had a Dawson unit. So when I talk to her, it's like the moment she can take the key, right, actually she want to move out already.
Because too small for her.
By then got 2 kids come out plus 1 helper. But then actually got 2 people. Then now become 5 people. By the time you take a key, the house is already too small. That's the issue. Yeah. So timing, especially for young couples, I think it plays a very crucial part.
Right. I think also like it makes sense because some of my clients and also like my friends and families, right, sometimes when they have gotten like BTOs, they might buy into like 3-room HDB because back then, this is the most like comfortable affordability that they can have. But by the time it's built up, maybe they have 1 kid already. Then you realize they move in, right? Actually, the space is really cramped up. So they might want to move into like a bigger flat. So I think like that's something that you also want to consider, especially when you are balloting. Do like probably think like 1 or 2 steps ahead. Let's say you have family plannings or things like that. Maybe cater for something that's larger. And if you have like even parents that might be staying together with you, then maybe you need something even larger than that. So do also take that into consideration.
Yeah, I think before we advise like what is the best route, maybe we can segment them into different types of young couples. A young couple, a basic one would be DINKs, we call it. Dual income, no kids. Maybe got 1 small dog. Then followed by a young couple with a kid. Okay. Then followed by young couple, 2 kids plus a helper. Okay, I think the family segment, like how big a profile is going to be like for the next 3 or 5 years or 10 years, your family planning is going to affect your route. That's for sure. Like just purely from the space wise. Okay, that's a segment. Then followed by perhaps a property journey. Where do you see yourself in 5 or 10 or 15 years kind of time frame? Because the option that you choose, that particular BTO is going to kind of lock you in for the period of time that you can't do anything because of the MOP period.
Yeah. So I think like, for example, for your question is that, let's say for example, the first kind of category, which is like the DINKs. I think if you really have that strong intention where you say like, okay, I really don't want to have kids. Like it's just going to be me and my partner like together. Then I think maybe like a 4-room flat is kind of just nice for the size. Maybe a 3, but I think a 4 is like comfortable just in case you want to have cats, dogs.
And nowadays, those are the new kids.
Yeah. So I think those kind of sizings are like just nice. But if let's say you are someone that, maybe like years down the road, you want to have kids, then maybe you want to have like parents that stay with you, then maybe like a 5-room could be like a better fit. Just because like, for example, now the new like BTO formats, they do have like this additional space where they can put like a study area, right? Some people convert that into like a secondary kind of like bedroom areas or so. So that could be another great space for you to kind of configure. So it's just that long-term planning because ultimately when you collect your keys, you're definitely going to stay for 5 years at least, right? So I think just be mindful on that.
How do I jump to the part whereby do you want to upgrade?
No, I think a couple of things. I think in terms of income and income potential, it's important to, as a consideration, to know is it a good feasibility to use your property as a means for asset progression, as a form of investment. I think like HDBs are good from the angle that you can stay in a location for the lowest kind of entry price. Yeah. So if let's say, for example, I am just somebody that I'm very good in investing in other asset instruments. Let's say, for example, I can do my stocks or my other instruments and I can easily have above 20% returns per year. So maybe I don't need property to be one of the drivers in my portfolio. And I just want to enjoy the lowest monthly installment to stay in the most central location. Then I will go for a prime flat. But of course, I need to be lucky enough to be one of the few that can eventually ballot and get this property, because the number of person allocating, competing for one unit, the allocation is a lot. Some people try for 15 times, 16, 6, 7 times, and then they haven't reached a natural conclusion, right? If let's say you want to look for space, then I think those standard HDB flats will give you more options. Because prime HDB flats, maximum size will be 4-room flat for central location. Only in the outskirts can you get 5-room flats. Yeah. So I would say that generally as a young couple, if financial allows, I would say that usually just go for 4-room or 5-room. Don't go for a 3-room first, because most of the time you will outgrow your space quite quickly. I think 3-room flats are easier for from a retirement perspective. You're looking at trying to downsize your current house because your kids have moved out. I think this is good for a retirement perspective. Lesser things to maintain.
Yeah, and I think on the topic of looking at your affordability and things like that, because we do have clients that are maybe high flyers or maybe lawyers or things like that. So sometimes when they were very young in their early 20s, right, they also underestimate what they can earn when they are in their, let's say late 20s or even their early 30s. So maybe midway through their MOP period, they're also thinking of using property as a form of asset progression or things like that. So I think also consider and also give yourself that kind of buffer and see what is your income level when it comes to your future kind of income level. Because I think you might also be thinking of using property as a form of asset progression as well.
Age 27 to age 32, this is where most of the time I observe there's strong income boosting. Strong income boost. So depending on the work that you are doing, depending on the industry that they are doing, most of the time every 2 years I re-meet the same couple, they might have a 50% to 100% increase in terms of their income. Yeah, so the options that is available for you in terms of property planning can vary quite dramatically. Of course, last time when I was in my early 20s, I was also surprised by my own income growth also. So I wouldn't be thinking, at a certain age, I'll be at a certain income, right? So sometimes kind of things is hard to foresee. So it's good to have some flexibility in that sense. So, okay, example. In what kind of income range will you all recommend that, should start with a HDB first? At what income range do you think, maybe can go for a resale HDB, or in what income range maybe can go for a condo? Shawn can write at the whiteboard since it's the nearest.
Okay, so what do I think in terms of the income level? Let's say, for example, if you're starting out, let's say, for example, you and your spouse or your husband and wife maybe you're earning 3K each, which is total about 6K lah. So I think you're earning a total of 6K kind of budget ranges or things like that. I would say that it's almost likely that, maybe you can start on the entry level kind of condominium ranges, or even look towards HDB options. But typically for young couples that are earning this kind of income level, usually I would recommend, if you want to play on the safer side, is to look at probably HDB options. Because for condominium option sites, usually around this range, there might not be something that would be suitable in terms of capital growth or appreciation or that. So for this kind of budget range, my opinion is that, maybe we can explore a HDB kind of ranges or things like that. So if let's say, for example, we buffer up a little bit more, if let's say they are doing really well, they graduate and they're earning a good level of income, let's say it's almost double lah. Okay. At this kind of ranges, I think we can explore that as well. So maybe for Rong, I think you have a bit of calculator magic over there, right? Over there.
I help you already.
Okay.
Let's say bump up to 12K.
Yeah, we bump up to 12K lah. So we can see on the screen right now, I think if you're looking at a private condominium status, you can loan about $1.2 million. So purchase price roughly should be about 1.5. Yeah, so 1.5 ranges, I think you can find something that's quite comfortable. But if you look at the income ceiling and levels or things like that, actually you still can afford a HDB. So if you're planning for asset progression plannings or things like that, actually for this kind of income level, you can consider condominiums as well lah. Yeah. Right, shall we have the next contestant?
Okay, so wait, so $6,000, you will recommend what kind?
I'll recommend if, for example, if there are young couple approaching and because some young couples as they approach me, right, they will say that, I also will ask them, say, what's your projection? Do you think that you will hit a high level of income before you get ballot for this BTO? So they will tell me that, actually my job, 3K, right, I don't think, very honestly, I don't think my progression will be very much lah. Can be maybe 4K. Can be maybe about 4+K at best in the next 5 years. Let's say, then maybe if you want to stick it safe, you can also explore the HDB option. Yeah. But if they tell me that, let's say for example, actually, I never really think of this question. when I ask them, they say, wow, actually when I see my senior levels, they are probably going to earn, let's say about 6,000 like that, or maybe you study even more in the next like 3 or 4 years. Then I will ask them, okay, maybe you want to consider whether or not the private route can be something that you're worthwhile to like explore lah. So this is how I usually would handle such conversations. Yeah.
I think maybe if you just want like a quick guide, because we don't know you, less than $8,000, I think it's a strong consideration to start out with HDB first. Whether is it like a BTO or resale, I think BTO or resale will depend on like how long are you able to wait in order to, if you have that bandwidth, if like you are schooling right now, you already understand that, okay, you are very firm that this is your partner. I think BTO route is great because you have the luxury to wait, because while you are studying, by the time you graduate, just nice, the keys are available too, and you're ready to go into marriage lah.
Yeah.
All right. So then I think like that is good for a BTO route. If let's say for example, you're in your late 20s kind of stage, still within 8K range, maybe instead of trying to wait for 3 years for like a BTO, you can opt to have a resale because you want to kickstart your family planning process very quickly. You want a space to call your own, you know.
Yeah.
Then you just go for a resale HDB. But I think from 10K onwards is when you can start to consider private property. But that is assuming that you're not coming from a lifestyle angle, that you really want to enjoy a pool, etc. and all that. Is because you are coming from like a financial investment vehicle. You're able to start off owning a property earlier, and you can still consider to, you know, like rent this out in the first 1 or 2 years.
That's true.
And continue to stay with your parents first.
Yeah, it could be staying with your parents as well. Then you can rent this out. I think we see a lot of clients having the capabilities to do that. So might as well leverage on your parents a little bit.
Jesley, what do you think?
What I think? Anything under 8 or like at 6K, I would strongly go for BTO. But I think BTO, sometimes you need like more than 50% luck than the money. It's a lottery effect. Then for anything more than 10K, I think they have the luxury to choose whether they want space over like a private condo. Because at that particular quantum, you can either get maybe something mature for resale HDB, but you have the space, you have the size. But whereas at the same quantum, maybe you have to make do with like a 2-bedder. Yeah, probably a 2-bedder, something compact and aged a bit.
Yeah.
So I think if let's say I put myself into the shoes of this Kimi 8145,
Very exact.
I would think that if let's say I think that I'm in a career progression route where I have strong, I think that it's a good chance for me to have strong income increase. I'm in a sector where it is a growing sector, especially in the tech sector, AI sector, or you're in like data analytics sector.
Lawyers, doctors.
Yeah, then it is likely that if I do not have the down payment, I will kick off with a resale HDB first, because I want to be able to finish my MOP faster and go into private property. From an investment standpoint, if let's say you're not seeing property as an investment angle, right, then I'll just keep my HDB and stay in the HDB for a long term. That's about it.
Okay, let's also touch and go on her second question also. When is the best time to sell? If let's say if it's for 3 different categories. Let's say if it's for a BTO, if let's say it's for a resale HDB, okay, just two. Like, is there a timeline to meet? Like, by when should I sell? That would be the best. Because sometimes like best is very personal. What is best?
I think it's very subjective, because usually my own recommendation is when is the best time to sell, right? Is that you need to have an understanding of what is it that you want to buy. Because ultimately, if we come in and we sell your place, we're going to leave you homeless also. So that's not the main objective. So I think the best time to sell is to understand what is your objective and what is it that you want to invest next. Because if you don't really have a clear picture and you receive like flyers every day telling you that your value is like how much, there's not really much reason to be selling a flat just because of certain like values. Yeah.
Okay, how about price point? If let's say like, okay, when is the best time to sell so that I have the highest of the profit, right? That's usually what people ask.
Yeah.
For BTOs, be wrong.
Okay, likely as long as Singapore is being managed well because of inflation, generally, I would say that as long as it's not a lousy problem. Okay, for HDB, I would say as long as the country is managed well, the prices will keep going up.
Right.
Aside for when you really reach a point where the house is becoming too old.
Right.
So that's number one, the price will go up. There is no reason to want to sell as early as possible. my key question I ask myself is, for example, HDB. If long as I sell my HDB and I can restructure my portfolio value to be at least twice the value of my HDB flat, I will do a sell. I will sell. For example, let's say my HDB now is 600,000, and just by selling, I can release the amount of equity, my names, and the amount of loan that I can afford. I can at least have a portfolio of 1.2 million. I will sell.
Okay.
All right. And sometimes when we see a lot of all these HD owners' equity, they can actually go up to a portfolio of $2 million. Rationale is very simple. If we just use simple math, right? If we think that our HD will still grow at 5% per year. 600k, 5% is 30k every year. If you can structure to a $1.2 million portfolio and it still grows at 5% every year, how much will we be getting? That'll be $60,000. Yes. Yeah. So that's why property value is a very key consideration in terms of your entire portfolio growth. In terms of the same number of period, how much price content can make grow. So it's like, if you have a bigger bank account balance, of course, with the same interest rate, you will earn more. Yeah. The only difference is how do you structure the property value, whether is it in one big property, two smaller properties, such that it makes sense from a financial standpoint, from a monthly installment basis, that it is sustainable and this is good financial strategy for you guys.
Okay, let's say I see the question, right? I feel like her question is very simple. Like, okay, I buy a BTO, when is the best time to sell? Let's say it's just from a price point perspective, I would feel that about 1 year after MOP. So within this 1 year, right, you wait for your neighbors to sell, to lodge all their caveats, and then there surely will be a certain increment to each and every of the transactions. Then by the first year, right, the end of first year after a BTO of MOP, more or less the increment wouldn't be as sharp. Like the increase wouldn't be as high. That would be the best time to sell. That's number one. Number two, I also want to see whether that particular BTO estate, are there any new estate that are going to reach their MOP? Because those will be the ones that are going to compete with me. They might be just at the same price point, but perhaps they might be 1 year younger. People do consider that. Yeah. Like that one is newer than my one, even though it's just 1 year older, then okay, I pick that one. Since the price is, or maybe they increase by 20k, maybe down one level. Also
depends on the relative location for your HD cluster versus the new MOP cluster. Which one is actually in the better, more desirable and more convenient, right? Which one nearer to MRT station? Which one is nearer to amenities? I think like that's a great suggestion if you want to maximize the exit price. But for most people, you are not just selling, right? You are selling and then you will be getting something else, correct? So if let's say, to get the additional 30,000, 40,000 by waiting for 1 more year, and because you are going upstream, higher property value, and you need to pay 50 to 70k more for your private property because you have waited, then would it make sense to actually wait?
The opportunity cost for waiting because maybe what you want to buy, the increment is even higher. Maybe like you could have bought it at 1.2, but because you wait now, it's becoming 1.4. I think that's the issue here.
Unless the different scenario is you are owning a cluster that is under prime flats. Prime flats, $1 million HDB. So if we see this kind of like HDB grow at relatively high percentage over the last 2 years due to multitude of reasons. Number one, the spread between the private properties at the same location, as well as, like the new launches that are available. And of course, the BTO available options to get into this location is very like 10 limited, over years, right? And if let's say today you are a private property downgrader or like right sizing, right? You want to come back to a location that is very convenient, you will consider this kind of like prime flats. So unless you are saying that you are going from a very strong HDB class and then you happen your next house that you want to buy, the private property one is in a low performing area or low performing type. Okay, then maybe it makes sense, to wait that additional 1 or 2 years, max out a little bit of pricing because you know that that cluster you want to go to, the valuation don't really go up based on the past few years. Then I think it makes sense.
All right, shall we move on to the second question by Mr. Super Charles Lee. Okay, the question is, how should one pick a resale private property? There's a lot of information on new launches. This person confirm gonna aim by all the all the ads because keep looking at the new launches. Then he got bombarded by the new launches ad. Okay, then
is Mr. Super Charles Y?
Oh,
I don't know.
Oh yeah, I think so.
Charles.
Yeah, Shell's why. Okay, but he feels that there's very little information on resale condo. If that's the case, then how do one pick that will do well?
Actually, we cover a lot of times in our podcast. Maybe editor can link the one that we talk about.
Mr. Super Charles, our NOTG.
Our mode analysis.
And over here, and over here, and over
volume,
here.
volume
Okay, but let's do a quick summarized version.
Yeah.
What is mode analysis? What is PLB mode analysis? Okay.
PLB mode analysis is a framework whereby we kind of analyze all the performance for all the condos, and we actually have a few framework checklists that we feel that consumer can use to help you shortlist what would be the better performing private, especially for condominiums. So maybe we just pick up five.
Okay.
Number one would be the numbers of units in the property development. Why is that so? Because whenever you check on your property prices, you will recheck with the valuers, and the valuers, more or less, they will just check back on the past transactions. So the past transaction is what they are going to determine what the valuation of your property is going to be. Therefore, the volume and the frequency of the transaction that's happening within the development is very crucial. As such, in PLB, we usually have a number which is at 300. Like if let's say this property has 300 over units, it should garner you a healthy volume of transactions in the condo.
Yeah.
Second one?
The next one is, of course, going to be your parents' attraction factor. I think as we are doing like consults day in and day out, I would say almost 8 out of like 10 of the consults are definitely like parents that are looking to move from one location to another that's closer to schools. So we also point out in terms of, how many like primary schools are there within certain locations, certain projects here as well, because the more number of like primary schools or more number of good primary schools, then allows for a lot of parents to come in and look at certain properties that's within this area. And of course, that in turn increase the transaction volume, increase the valuation as well. Yeah.
So in short, the system basically grade all the properties in Singapore across 10 different factors. And basically once you key into the system, right, we will have a grading score. And this grading score is updated on like a monthly basis because the transaction volume, the transaction price changes, it will affect the ranking. Out of these factors, there are 2 key components. One is what we call the common sense factors. Common sense factors meaning like, for example, your good school, near MRT, volume effect, transformation, tenor, you want to buy something that is more like freehold, younger properties, right? So everybody already knows how to pick a good property based on all these interesting attributes that you think that will be popular in the resale market, right? But what people often missed out on is always 2 things. If you want price of the property to increase, there must be more demand. And so hence we analyze one very strong factor is called exit audience. When you want to sell, are you attracting upstreamers, upgraders from HDB? Or are you attracting more downstreamers from like people who are right-sizing their bigger homes like landed property? So you want to see in the area, do you have a lot of landed homes? When you have a lot of landed homes, it might mean that people want to come down to still want to continue to stay in that location, but they don't want that kind of size anymore. If there's a lot of new HDB clusters, especially in areas that cross a lot of $1 million flat transaction, that will mean that your condo that you are buying over in the area will have a boost in terms of pricing because these people might want to continue to stay in that locale because of the support structure, all the amenities that they are used to. And we are focusing on newer cluster HDBs where the dynamic or the demographic of people is actually younger and they have profit. Not looking at like old resale HDB because the dynamic will be they are probably going to retire. They are not interested
to move anymore.
They are not interested to increase their property value and increase more monthly installment, right? So we want people who are young, people who make a lot of money. That's why they have the incentive to want to consider changing the private property. So exit audience. And then lastly, is everything about pricing. So we have 3 factors is on pricing. So we have the region disparity effect. We have the price, region disparity effect, district disparity effect, where we look at what is the price disparity within a same market segment as well as the same district. Also in terms of the quantum effect. So you want to see that number 1, is the price going to be too high when you want to exit for like the typical audience that will come into this locale? If you are buying something that is priced too high, then we know that the chance of it appreciating for the next 3 to 5 years will be lower because it is overpriced. Now, we want to see disparity effect because if we can find margin in terms of price entry at the moment, we are already entering a lower risk. So I think in short is everybody knows how to choose a good property. We help you to choose a good investment by looking at the key factors like exit audience as well as price disparity. So these two factors.
How many more you want to eat?
Conclude lah. You must moderator. You must either conclude or you must say something else and then ask question.
That was really well.
No, I thought that just now I say five factors. I was like, that one consider 1, 2, 3, 4. Okay, I give you the fifth factor. The fifth factor, of course, would be the MRT proximity. Pardon me if I'm wrong. The article or the government article say that like in the future or like their vision is that within 10 minutes walk, everyone should be able to walk to the MRT station.
8 out of 10 households.
8 out of 10.
Within 10 minutes walk to MRT
So the
station.
other 2 out of 10 will be the GCBs because they cannot walk to anywhere, I guess. And they don't need to walk to anywhere because they have cars. Okay, it's the MRT proximity. I think there are 2 that is going to be up and coming, not in this year, but maybe by 2030. One of it is Cross Island Line. I think everyone should know. If you don't know, please at least go and like find something. I mean, just go and Google Cross Island Line or Lime Green Line. I like to call it Lime Green
Line.
Yes, so this entire line is what I like to call the PIE of the MRT. Because it cuts across the Singapore by half. Okay. All right, it's going to start all the way from the east. This will be done by 2029, 2030, somewhere here. Then the other half of it will be in the west. In the west, around Clementi area, they should be done by 2032. Yeah, so these are the 2 timeline that you should be looking out for. So all these are the new MRTs. All these are underground. This will be coming up. The another one that I happen to visit because now only Chinese New Year, I get to travel the whole of Singapore. You know where I went to? I realized that, hey, how come there was so many track on top?
Pulau Ubin lah.
No lah.
Bongo
Region Line lah.
Oh,
go Bongo for what? Jurong Region Line. Jurong. It's huge, man. The tracks are okay because I think they're over me. Oh my god, this is so big. Like okay, Jurong Region Line. This and
it's to increase the connectivity to on the western region.
Yes, correct. So this one is also up and coming by when? Let me see. I also don't know when.
Around 2032.
Also 2032. Yes, correct. So this and then the part of it is going to be in Teng Ah. I don't know which station is it, but I know it will cut Teng Ah somehow, somewhere. Yeah, this is going to increase the connectivity for the residents.
Okay, so basically, I think like why we are mentioning about the future MRT line is it's important that you are buying for future MRT lines, you are buying for transformation attributes. Do make sure that the time horizon that you are holding on to the property is in line with the transformation.
Yes.
Yeah, so for example, let's say there's a new MRT line that's going to complete in 2035 and then you want to buy now and to reap the benefits of the MRT line, it will take very, very long. So I think like today is 2025. If you're going to hold the property for 5 years, I think some of the key Cross Island Line considerations might be decent opportunities to consider.
It really did. Because okay, we are all like helping our client to sell, right? So I have a unit at Seaside Residence. At the point of time, right, the MRT wasn't up yet. Really, the traction really almost zero. Like every client like, hey, we got MRT downstairs. How come got no viewing? Until the month whereby the MRT started working, like you can tap the card inside. It was sold. It's really that impactful. Okay, so this will be the mode analysis, especially for whether you are talking for resale or new launch. I think it's quite helpful. So we have the mode analysis. If you like to contact any of us, please, the description is down here below in the box. Right. We will feed you more information after you sign a buyer exclusive with us.
No, okay, editor, that one cut away.
Okay, let's move on to the third question, which I thought it's a very, very, very interesting question and probably it will help to answer a lot of our clients or the consumers or all you listeners out there. But it's very long though.
Oh.
Okay, Shawn, please.
Okay, let me read.
You cannot see lah, too small already.
Over here.
Okay, let me hold the mic. Congratulations to 100th milestones. Amazing insights. Would like to hear each of the PRB's consultants share their personal picks and perspective on property choices for different budgets. If you had the following budgets, which district and property would you buy? So there is a 1.8, 2.3, 3 mil, 4 mil, and there's
also which will you avoid and why?
Yeah. So which areas that you bet on appreciation and which areas that you avoid. So they just want to have a listen to our opinions as well.
You never read the 1.8 million?
No, 1.8, 2.3, 2.3.
No, as in like there is a specific question for each
Okay, so
price range.
I mean, he's really quite nice, you know. He helped us break down, you know, what are they for, you know, what kind of profiles and the budget.
Yeah.
So for the 1.8 million budget, the question would be like, what is it going to be for ideal for young families, first time buyers looking for good balance between affordability and investment potential. Whereas for the 2.3 million budget is for people who are upgrading to a more spacious unit or exploring boutique condos. 3 million budgets, he's very specific, targeting high value freehold properties or sought after locations with rental yield in mind. Then 4 million budget would of course be aimed at luxury seekers. Should they be focused on prime district CCR or rare landed gems? So let's start off with the 1.8.
I will say that number one, this person very smart, asked a very smart question, because you know that actually in our industry, right, deals are the most important. It's like the biggest kept secret that is usually, you know, only reserved for our clients that we are working on right now, because we want to give them the best deals, right? So, of course, we will try to give you value on this question by providing frameworks like a general direction. Yeah.
So what you're saying is that he's asking for the exam answers. But what you're going to provide is the formula and the strategies.
Yes.
No answer specifically for you, sir.
No, as in you can provide your thought process. I mean, I will share from a framework perspective lah.
Let's start. Come, Shawn, 1.8.
Right. So, $1.8 million kind of budget range.
Can we trouble you to be on the whiteboard?
Oh, okay.
Damn.
The producer is like, hey, go use the whiteboard, please. I already set out the whiteboard already.
Why is black? Why is it not called blackboard?
Okay, thanks. Okay, 1.8 million, ideal for young families. Don't switch,
sorry.
Ideal for young families or first-time buyers looking for a good balance between affordability and investment potential.
Categories for like young families. So young families, I'm assuming that you're going to have at least one kid, right? Or like maybe two. So ideally is, of course, that if within this budget range, likelihood you're probably looking for like a 3-bedder or 4-bedroom. I'm just assuming that we're talking about condos, right? Ideally is that you're going to be looking at a 3-bedder or like a 4-bedder condominium. So inside the questions also, he mentioned that, hey, might want something that is good for capital growth, something that is good for like rental kind of appreciations as well. So naturally for like capital growth, of course, we want to have a look in terms of our like mode analysis here as well. So the idea is, of course, that you want to be able to understand the entry price point and also want to be able to understand what's your exit audience, because we can always buy property, but in order to make money out of it, we need to sell with a profit, of course. So capital appreciation growth, definitely we want to have a look in terms of like our mode analysis to see whether we can focus on this. Then, of course, the other thing is that the rental, because maybe this young couple that's down here, they might have plans to, let's say, just me and my wife currently. Then in the future, maybe when I have a kid, I might be moving back to my parents' place. Then I might want to rent my condominium out. So I also want to understand, let's say in the event if it happens, can I be able to cover my mortgage? Will I be able to like rent with a surplus kind of property so that I can also buy maybe milk powders or things like that, right? So ultimately for rental, we also have to understand where the tenants are coming from. So when we look to purchase a property as well, we want to understand that even if we buy for capital growth, is there certain like developments that's around this area that helps to attract certain tenant pools and allow us to like easily rent out. So those tenant pools could be in a sense of like maybe job developments that's happening nearby. It could also be maybe in the form of like international schools that is nearby that will attract like foreigners to come in to rent certain spaces here as well. So I think if you are focusing on like 3 or 4 bidders, look at capital growth, look at rental, I think most likely should be able to cover most of those boxes if you just follow this. Any other thoughts?
So if you want to have capital growth, right?
Yeah.
I would say that you can focus on like the bigger sizes that is available. So one of the best ways to get a bigger size, let's say for example, a 4-bedder, this you'll be talking about resale EC in the outside central region. So if you want to focus on resale EC in the outside central region, there are lesser than 12 years old from a tenant standpoint. In some locations, you are still able to find $1.8 million. All right. For pure condos, you'll not be able to look for at this kind of price point. Like if you're looking for something that is a little bit younger. So this is one angle. So if let's say the resale EC can also offer decent distance to the MRT station, and it has a transformation elements where the government is going to reshape the landscape in the next 5 years to make it as a economic hub, then it makes sense. So examples of 4-bedders, 1.8 million range resale. Okay, maybe Choa Chu Kang area. Okay. I think quite generous.
Yep.
Okay, Choa Chu Kang area you can find. If you want something that is focusing more on growth, transformation growth that is very quick, Punggol,
Okay.
is quite interesting because our Punggol Digital District transformation is really taking shape. SIT is open.
Tenants are there as well.
For the 4 big major, what do we call it? 4 big MNCs already invested in that geographical landscape. But of course, Punggol prices has actually risen quite a bit recently, especially for those that are near the Punggol MRT area. So maybe if you might be near to future Cross Island Line in Punggol, but not near the main MRT line, depending on what's the price spread. So we always talk about pricing disparity. So imagine today you are buying in Punggol central area where you can walk to MRT station. And then one don't have MRT but it's LRT but has future MRT station, same price. Which one will you buy?
Yeah.
You're supposed to answer me.
Supposed to answer you. Because I buy with the one that is closer.
Then you should buy where there is existing MRT station because you know that the non-MRT station hasn't come out yet, is priced in already.
Yes.
If let's say there is a price gap, then maybe you should consider the one that is future MRT because you know when the MRT is up by right, it should be similar pricing.
Yes.
Yeah, because of the greater connectivity. So how much price gap is considered interesting, Shawn?
Wow. I would say that if let's say right, you were to get like a 3-bedder that's near MRT right now, let's say for example at $1.5 million, then there is this other like 3-bedder that is close by to like future MRT stations that's coming up in the next 3 years. If let's say it's about maybe let's say about 1.3-ish, that kind of disparity.
So 200,000 for you lah.
200,000.
All right.
Probably. Yeah.
That's a pretty good disparity. But of course, now 1.5 Punggol MRT cannot find already.
Cannot find. Yeah, we're not.
No, 1.6 is the resale EC, you know, 1.6. Wow, very actually tell the answer already. So anyway, in summary is I think what's important, right, is to, because why we also don't want to talk specifically about projects is you want to understand that what we believe in is not that there are certain good projects, because everybody know how to identify what is a good project, because they have all these attributes that won't run away, one MRT, etc. and all that stuff. But what is really important is, does the pricing make sense? That's why we talk about the price gap. I can buy either that is near existing MRT now, or I can buy for a future MRT station, but my decision will be based on which one will offer me the correct price gap. Same price with current MRT, no MRT, I will buy the one that is MRT. If there is a good price gap, I will buy the one that has future potential.
Yeah.
So the answer depends on when you're executing. And Jesley got something very interesting, right, for 1.8 million.
Oh, hey, okay. We talk about the strategies first. The recommended.
Actually, I missed on it. 1.8 million, if you top up a little bit, you can also consider. If you also consider like rest of central region, a compact size 3-bedder. Not a lot of choice because most of the time you'll find like a 3-bedder in your rest of central region. It will be $2 million for compact already. Close to like 2.5 million, 2.4 million for something that's 3-bedroom and premium.
You're hitting the second one already. 1.3 budget.
Wait, okay, sorry.
Okay, later.
But 1.8 million, there is a project with dual key option. 3-bedder. I think that is interesting for people who, let's say you're a small family. You can move in, start off with the studio first. So 3-bedder dual key, so studio plus a 2-bedder. You start off, just got married, you stay in the studio for 1 year. You rent out a 2-bedder. Then it will cover close to, I would say, 2/3 of your monthly installment if you are a young couple. And maybe 1 year later, you start to have family plan, you switch. You move to the 2-bedder, you rent out the studio.
Yeah.
You rent out the studio. And then now you can cover about 1/3 of your mortgage. As you continue to hold, so you have 2 ripple effect. One is for appreciation, of course, because this kind of price point for central location is a very good deal. Second thing is, somebody is paying for your rental every month to cover your money. So that adds on to your rental, that's why add on to your overall investment return as well. And if let's say your family balloons and become super big, you can kick all your tenants out. And then now you have a 3-bedroom, but you have 2 ensuite bathroom, which is pretty rare.
Yeah. Yeah, but of course, do consult with your spouse and partners, because when you buy a 3-bedder, you stay in the studio, your partners might also have some thoughts on that.
More of like, I can't tahan in such a small space with my
But investment
spouse.
perspective, that's perfect.
No, I really, it really depends on like what's the philosophy or the mindset of like financial planning, right? So I think previously we talked about the FIRE movement, right? Financial independence, retire early. There are couples who buy into this philosophy, and hence they were buy into the idea, I want to minimize my amount of outgoing every month. And so I just want to stay the just nice space. I don't need the excess space. And you have the flexibility to change how you're going to allocate your own essential spaces versus how much you rent out. I think having a good dual key helps you to change you can change your decision every year.
So juicy. Can you share like where is this property or not?
Where is this property?
Yes, Jesley. Okay, we don't want to miss out.
Jesley shared a very interesting
Wait,
deal just
1.8 budget, you can just follow what they just mentioned. But maybe I just want to touch on a little bit on the details of the units that you'll be choosing. Because nowadays the new launches, 3-bedder, they are 900 over square feet, 4-bedder, they are 1,002 over square feet. I think that would be the formula moving forward. So what I'm trying to tell you is that if let's say you find a 3-bedder that is very sizable, the moment you step in, you're like, wow, this is the house for me. But I want you to do a second check on the size. Meaning to say, like, if let's say it's a 3-bedder and it's like 1,003 over square feet, would there be a better option for you to look into 4-bedder instead? Because at this particular size, maybe 3 or 5 years later, when you want to look for your next investment and you want to find a buyer for your unit, you might find yourself being sandwiched in between the 4-bedders in the surrounding project or even in your own project itself. 3-bedders or 4-bedders in the OCR region, that will be recommended. Like what you say, 1.8, maybe you can find a 4-bedder in Choa Chu Kang. 1.8 probably will be struggling to find something in Punggol.
Yeah, Woodlands
also can.
Struggling. Yeah. Okay, maybe you still can find.
1.8 for 4-bedder.
Can. Still have.
Very rare.
In the future, upcoming multi-line in Punggol. Okay, that's all we're going to share. Dual key in District 14, also walking distance to the MRT station. So I just bought one for my buyer. Exactly what I just said. It's a 3-bedder dual key. The studio unit was rented out for 2,005. The main unit, 2-bed, 1-bath, was rented out for 4,004.
Very good rental you.
Freaking good. Like, my client now literally is
what's the studio rental again?
2005. So this is the rare kind of scenario where your rental can actually cover your monthly installment.
Yes. But I actually was quite how to say? I was
surprised.
I was very surprised. I told my client, I think the main unit maybe 4,000 can already. Then after when we went to check the unit, right? Hey, we have a new tenant coming. Very blessed. We got a new tenant coming. Oh, how much? 4,004.
Wow, Jesley,
and then it come with all the inventory. Like, it's fully furnished. We literally just have to sign the paper soon, completion, and then she can collect money already.
Nice.
Yeah, so this is a kind of unit or layout. Size-wise, it's about 900 over square feet. Okay, it's not too big. It's not like that comparable to your 4-bedders. Because sometimes, right, the 3-bedder dual key can be bigger than the 4-bedder at the same development.
Or the same size lah.
Yeah, at the same size. Then it's very awkward. Should you go for a 3-bedder dual key or should you go for a normal 4-bedder?
So in those kind of scenarios, these kind of developments, you realize that the actual 4 bedrooms of the same size as compared to a 3-bedder dual key will have better exit audience. It will usually have slightly better price growth. But for this development, what is interesting is there is no size disparity because this is 958 square feet. Your typical 3-bedder is also 958 square feet over there.
Yeah.
They have a smaller size 3-bedder over there as well.
Which project is this?
Editor must add. Okay. Yeah. Can you share that one? It's very interesting. 1.8
Okay, so I found a very interesting because like you're asking like 1.8 what you can find. Actually, I also don't know because every day the market kind of refreshes itself.
Okay, so Jesley give you something that is more out of the norm one, not the usual consideration.
Usually, right, how humans think right would be okay at $5 million, what can I get? The best of the best. If $5 million I can get a GCB, of course I'll get a GCB, but I cannot. So I was thinking to find based on the budget. Okay, so I put 1.85 lah, give me some buffer to negotiate a little bit, and then I will just take away everything that is under 1.7 as well.
Sure.
Then right, I can see landed. I mean, see
Okay.
what kind of landed I can buy, ma. Correct.
Landed,
So there are a few. Who is this Fuyong estate? So there's a there's a lot of Fuyong estate here and there. So you see, the key point right to note is that the tenure is unknown. Likely I don't know left how many years. I know Fuyong estate only left like got 10 years or not.
Fuyong
I
estate,
don't even know got 10 years or not. I just know it's only left
that's
that
quite
few
old.
tiny little years left, which is why the PSF is very low and the quantum is very low. So I was just looking around, I also want something that's freehold. Then I saw this, 7-bedder. Okay, so based on the newest regulation, if let's say you have a size more than, I think 100 square meter, if I'm not wrong, you can rent up, not 6 packs anymore, you can rent all the way up to 8 packs. Which means that if let's say your size okay, then you just apply to the URA, you can rent out to 8 packs. So I say this shop house, freehold, 7-bedroom, 3 bathroom, the square feet 1,334. The PSF is the PSF.
Oh, the deal so good you
Oh,
all go
no
and buy
PSF.
already.
I mean, so back to your question again. If let's say you are a first-time buyer looking for a balance on affordability, investment potential, I think for rental play, this will do very well. I mean, I don't deny that it might not be the most ideal place to stay, especially for a young family. It can be a little bit not as pleasant.
Maybe
but
you can.
for affordability, investment, and then if let's say you have a place to stay with your parents and stuff, this is a potential. That's all. That's all I'm saying.
Oh, yeah.
I just see a very interesting thing.
I thought-
Okay, next up, let's go on to a 2.3 million kind of budget. And of course, the bedroom must be able to fit a queen size.
For boutique condos, why some boutique condos, the price go up? It's important to know, right, what is the unique mix of this boutique condo. If you are looking at a unique mix of boutique condo where they are mainly for own stay unit 3-bedder and 4-bedder, okay, there is a better chance for the price to increase.
Can hear or not? Because
Yeah,
I think your one cannot.
Can hear.
You are so loud that
Can
you
hear
can
when I'm
hear
here.
you.
Can hear when I'm here. Wow, that's creepy.
wow, this is so powerful.